to Bitcoin Technical Analysis. Today we have George, a technical analyst, Tone, head researcher at Brave New Coin, and BTC Vix from Whale Club TeamSpeak. Thanks for coming on today.
Thanks for having us.
Thanks.
Thank you.
Great. Okay, George, you're going to talk to us first about some different markets.
Yeah, I'll leave the Bitcoin to Vix and Tone, and I'll just jump into a couple of things some themes that I've been talking about over the last few weeks, particularly U.S. dollar, commodities, and the S&P. So I'll start with the chart of the USD. We had that downside break last week, and it came back strong over the last few days, and then it kind of fell off a bit. As you can see here, it's on a daily chart. It's just below its 100-day moving average, but it had this V bounce in the RSI and is holding up in here right now, and potentially looks to be setting up for consolidation here. And you know, the MACD also, if you can see at the bottom here, is starting to cross over. So still in a negative position, but it looks like the move here is going to really be based off of what we get out of the Fed in the coming weeks. But a strong USD has been the case for a fairly long time, and it's hurt a lot of other currencies and commodity markets. So looking at the CRB which is an index of commodities, you know, we talked about it looking for a bottom in that a couple of weeks ago, and potentially we've set up with some kind of a bottoming process here, and that's been a result of a weakening of the USD and probably an oversold bounce. As you can see, it got to this oversold level and has been bouncing since. It's still below its 50-day, but you know, the MACD's even crossed over as well, and you're looking at a place where potentially you can still have a little bit more upside. It's down yesterday, but it's been a pretty strong move from that 185 level. And over here is crude oil, which we've talked about a couple of times too. And you know, I looked at that level last week of the 2009 lows, and if it didn't hold that, it looked like it was going to go a lot lower. So far, it seems to have held that level, had this strong couple of up days, and bounced from oversold levels as well. Still, it's way below its moving averages and still hasn't made a crossover on the MACD. But you're getting some moves in these commodities, and it's not really clear if they're just oversold bounces at this point or if this is a bottoming process. Still yet to be determined. And the other thing I'll talk about is the S&P. But before I do, I just want to talk about how I think that really what we're having here is a correction versus a bear market in the S&P. And what that means is corrections generally are around 15 to 20% in price and shorter in duration, and bear markets usually are 30% and greater in price and take longer time. So my thought process is that what you're seeing here in the S&P is the same thing that happened in 2011. I'll show you a chart right now of the VIX, which we've mentioned in the past. It had spiked in that massive down move, and it has been consolidating and coming lower since. It continues lower. As you can see, you get this big red candle today. Still right around that level from October that was the high in the VIX for the year, but it looks like it's coming off. As the VIX comes off, it also allows for things like the S&P to go higher and for these assets to not correlate, and you've been seeing some of these assets going higher. Next chart I'll show you is the S&P. So here it is, and this chart is a daily chart going back a year. I put in some Fibonacci levels from the bottom here. The 61.8% level was 1968, and we got up there, and then we've fallen back through it. I think, you know, we had a strong day today, a really bad day yesterday, day before. But my thought is, as long as that low of around 1865 or so stays, and we consolidate around this, that's probably the low, and we'll move higher from there in the coming months. I don't think we're going to have a massive surge or anything like that at this point, but I do think that maybe that will prove to be a bottom. And then here I have another chart of the S&P, and this is from going back to 98, showing this uptrend that we've been in. So 2000, it was at 1550. 2008, it got to 1576. Then it fell in 2009, and then here we are at about 1867. So I think as long as we stay above those areas and this 1867 level, but we'll still be in an uptrend even if we get down to maybe 1700, but it'll be really shaky by that point, and potentially it could be the end of the bull market. But right now, I think we're still in. I think it's just a correction more than anything else, and I think that might be all I have. I might have one last chart. Yeah, oh yeah, I do. So I'm comparing this to 2011, and this is the 2011 chart when the S&P got hammered, and that was really around. It was kind of the same scenario, except they were talking about getting QE. Was there going to be QE and waiting for Jackson Hole, and everyone thought no QE was coming, and then it came. And we're kind of in that period now with like interest rates. Are they going to rise? Aren't they going to rise? And that's been really scaring markets along with China. And you've had this massive downturn. What was also associated that with the death cross, which we haven't gotten yet. So we've had moves in the past in this bull market where it looked like it was going to be over and it hasn't. And I think that's potentially where we are right now. And of course, based on what comes out of the Fed meetings in September, will really determine the direction through the end of the year. But that's what I'm speculating on at the moment, and that's all I really have.
Okay, thanks a lot for that.
Thank
Okay,
you.
Vix, you want to show us what's going on in the Bitcoin world? Is anything going on?
Well, that's the question. At least as far as price action goes, we've been just deathly sideways and just grinding up all those people that think, we're breaking down finally, we're breaking out finally, and it's just been just lifeless, crawling along here. Zoom in a little bit on the 4 hour. Let's take a look. Yeah, just more sideways. Maybe slightly bearish that we're going to come out of this and at least take a probe down. But really, it's just sitting on hands, not even trading Bitcoin right now. So pretty minimal report as far as the Bitcoin analysis goes. After all the price action from the last couple of weeks, it's been quiet, at least on the price action front. But Bitcoin always has some kind of drama or developments going on. So we recently found that OKCoin will be halting U.S. deposits, and more specifically, U.S. people couldn't use Bankwire or other methods before, but now they're actually halting Bitcoin deposits. So I think that takes it to a level much higher than where we were before, and some people have reached out to OKCoin support, and most of the response has been that it concerns their bit license application, and they're not just applying it to New York, they're applying it to all U.S. People that have identified. So pretty concerning, at least on that front for the traders. Many of us have been at OKCoin for quite some time. It has the leverage and the liquidity that we so desire, so a little bit of a shake-up there. I think kind of the joke, or maybe not the joke, but the concern is a lot of Bitfinex has been struggling from just a functionality side of things. They've had some database issues. They had the close button that, well, it means close your position, but it also means open in the opposite direction. So people have been leaving Bitfinex, but if you're US based, now it seems that OKCoin isn't as good of an option. And maybe even Bitstamp is getting some of those users that are leaving Finex, specifically going back to Bitstamp or going there for the first time. So that's really all I have as far as Bitcoin goes. Pretty quiet on the Bitcoin front. Forex has been mainly where I've been playing this week.
Okay, great. And OKCoin has halted deposits for Bitcoin and fiat for U.S. users, but so far withdrawals are okay if you already have coins there, right?
Yeah, it's like reverse. You can't you can't get in, but you can get out, I guess, for right now. But I mean, if this kind of might be the first step, maybe not withdrawals halted, but they might start to just eliminate all their U.S. customer base from trading completely. Because right now, if you have coins there and you haven't reactivated or you haven't tried to deposit, and you have coins there, you can still trade. So, for now.
Okay, great. Thanks a lot for that. Okay, Tone.
All right, hey guys. So on the Bitcoin front, I have the daily chart open, the one I use in my articles and reports. And unfortunately, technical analysis in the Bitcoin space, I feel, is not saying much right now. One of the reasons is because we had that incident on Bitfinex where the price crashed. There were too many over-leveraged longs. They had some technical difficulties, which they admitted to. And once the price started falling, it kind of snowballed. And other exchanges followed suit, but not to the same extent. And right now, we're looking at a situation where Bitfinex has made a higher low last week versus 2 weeks ago, while most other exchanges, most notably of which is Bitstamp, that has made a lower low since 2 weeks ago. And that puts a trader in a bit of a bind. And that is not something I've seen in any other market, because most of the markets only really have one price to go by. And what we really need is a nice index that every single trader follows, because then traders are all looking at the same thing. Because all my notes are on the Bitfinex chart, since I thought that's where most of the volume was. That's what I'm using at the moment. But I don't want to use price as a gauge right now to judge anything because of the reasons I just said. What I'm looking at is strong support at 200 and very strong resistance at around 250, 255. So as long as Bitcoin stays between those two numbers, I honestly don't recommend trading it. Just wait. Wait for it to tip its hand. What we can see in this chart is that our momentum indicators did show oversold conditions. On my chart on the right, you can see that the MACD has crossed and is now trending up, which is good. You can also see the RSI hit its lowest level since the lows back in January, which is also very good. We really needed an oversold condition. It got a little out of hand, how much it fell, but the fact that it hit oversold is usually pretty good. Another thing that is not looking good is the death cross that is imminent and just a few weeks away. We had the golden cross. I was very happy. I did expect the price to pull back from 315 into the cross like they usually do, but I did expect that condition to hold. I was pretty bullish on Bitcoin a month ago, but recently all the momentum has shifted. I know I personally put a lot of blame on Bitcoin XT and the way it was released. Definitely scared some people, but everyone is of their own opinion on that, and there has been some controversy. So that's how I'm looking at Bitcoin right now. It's just in a wait-and-see mode. It would be nice to see it make a new, more recent high around 240, but even then you got strong resistance right above the round number 250, the death cross, the horizontal resistance. It's just a mountain of resistance at 255, so until it can jump above that, I really wouldn't be jumping all over Bitcoin right now. So that's kind of my outlook. Also, the global atmosphere, Europe isn't imminently collapsing like it was during the Greek event back in June and July. That is definitely coming. I believe Italy is next, and when that happens, the media will jump on it again, whether it's true or not. In trading, it doesn't really matter. The rumor is more important than the news. What people believe is more important. Once the media gets on the bandwagon that, oh my God, another bank closure, another country is rationing their people's money, Bitcoin should have a nice boost, and that should be coming towards the end of the year. So for now, Bitcoin just needs to hold in there. All right, so let's talk about a few other markets, though. One of the other charts that I currently have up is gold. And I just went to Finwiz to just briefly look at gold. The way I'm playing gold right now is I'm actually short gold. I don't think it bottomed. I think it will get to 1,000 and possibly lower. The way I played gold back in August, I went long from about 1090, and I got out at around 1140, a bit earlier than it topped out. It topped out at 1165. I ended up shorting gold at 1140. I believe it got back as it went up to 1170 right after I shorted at 11. Sorry, I shorted at 1160. The next day, there was the big market crash in the stock market, the Black Monday. Gold popped to 1170. I was down $10 in that position, and ever since then, it's been looking pretty good. This is more of a swing trade, willing to hold it for a few months. And I'm really confident in this trade because when the stock market falls that much and gold can only muster a 10% gain, that is just miserable. I mean, I thought it was the worst trade of my life. I shorted Sunday night. I wake up on Monday morning and the stock market is down like 10%. I'm thinking gold's going to go through the roof and make new highs because everyone's going to panic. And it didn't. It only went up $10, and now it's slowly coming back down. So I'm pretty confident in this trade. I don't believe gold is bottomed, and I think there is more downside to go there. One other market I was going to mention is in the energy space. I know George mentioned oil, and if I open up oil, oil has just been a monster. It bounced off of 38, went all the way to 50. I don't recommend swing trading oil right now. It is way too volatile and way too dangerous. But oil is good for nice little day trades. It seems to be swinging up and down. You want to give it a little leeway, and you should be able to do good on oil. When oil picks a direction, it usually moves about $1 within the next couple of hours. So oil has been a really good asset to day trade during the day. I wouldn't recommend any swing positions. And just to briefly comment on the indices, I guess let's go with the S&P 500. I agree with George, exactly what he said. I see the current atmosphere more as a correction than a long-term bear market. It's hard to say whether the low from 2 Mondays ago, the low at about 1860, it's hard to say whether it would hold. I believe that it will hold, but I also expect September to be extremely volatile. If the low does hold going into October, I would be very bullish on the market, October and the following year, and expecting new highs. So that's my outlook on the S&P 500. Again, I'm not ready to pick a direction yet. I want to let September play out. But as long as the closing low holds on a weekly basis and the intraday low holds over the next month, I think the future is still bright for the S&P 500. All right, that's my little outlook for the next month or so.
Okay, thanks a lot, Tone. All right, that's all for today. That was Bitcoin Technical Analysis on World Crypto Network. Make sure to thumbs up, subscribe to this channel, and share this video. Also, put your comments below, and we'll get back to you. Thanks a lot for watching, and watch us next week, same time, same place. Thanks a lot.